Hello, everyone. Thank you for joining today's webinar on the Clean Electricity Investment Tax Credit. Just a few quick notes before we get started. During the webinar, all attendees will be muted for best audio quality. If you have any questions throughout the presentation, feel free to use the Q&A button at the bottom of your screen to type in your questions. These will be monitored. It is my pleasure to introduce today's presenters, Fernando Mello, Etienne Lecomte, and Jeff McCauley. As CanREA's Senior Director of Public Affairs and Federal Policy, Fernando Mello leads CanREA's federal advocacy work, supporting members on federal government engagement priorities. Before joining CanREA, Fernando worked as a clean energy and technology public affairs consultant at PAA Advisory and Global Public Affairs, helping organizations find opportunities in Canada's transition to a net zero economy, and as a federal policy advisor at Clean Energy Canada. Etienne Lecomte was a clean tech entrepreneur with over a decade of experience in renewable energy software and regulatory compliance. He is the managing director of LCAB, where he helps renewable energy developers navigate and maximize investment tax credit claims in Canada. And Jeff McCauley is our very own CEO here at Charge Solar. He is a veteran in Canada's renewable energy landscape with over 2 decades of industry experience. And he also sits on the board of CanREA. And he will be moderating today. So without further ado, I'll pass it over to Jeff to get us started.
Great. Thanks, Tatum. And just before I start, I wanted to give credit to Solar YYC for this MERB install using Fast Track Avenue. And it's a really cool way. When we think of commercial solar, often we show photos of huge ground mount arrays or big flat rooftop array. And I really liked this install. This is not a rendering. It's an actual photo of 11 buildings utilizing I believe, the Clean Tech ITC. They can keep me honest on that. But today we're covering the Clean Electricity ITC, and thanks again to my friends and colleagues Fernando and Etienne to help me present today. The objectives are, of course, to provide the latest updates on the Clean Electricity ITC. We're going to contrast it to the Clean Tech ITC that you should already be up to speed on, and if not, we've got a series of webinars that the three of us and KPMG have presented on previously. And then we'll leave you with guidance on where to find further information. Sometimes you have to listen to this, digest it. You'll get a link to the slides you can go back to review, but often it's digging into some of the details that are only available on the CRA website as well. So we'll provide some guidance for you. Okay, with that, I'll pass it over to Fernando.
All right, thanks so much, Jeff. As always, pleasure to be here and talk about the sort of political updates and how things are going on that clean energy ITCs and the clean economy in general. So on to our next piece for us, if that's all right. Thanks. So if you missed it, we now have royal assent on Bill C-15, bringing into effect the Clean Electricity Investment Tax Credit. I think at this point, Jeff, Etienne, and I have been working on this for an absurd amount of time and trying to bring this across. I want to give a big shout out to Etienne. At some point, we did a bit of a cross check between Etienne, Jeff, myself, and a couple other colleagues. We may or may not have provided solid changes to about 20% of the existing legislation on this. So it's been a hard slog and a big go, but want to give a big shout out to both Jeff and Etienne for a lot of their help on this. Now, we've now entered this interesting phase where we are allowing certain, and I need to be very clear about this, certain non-taxable entities to claim a tax credit here. I know Etienne is going to be going into a lot more of the technical, but I'm going to give you a bit more of that upfront why, how, and the sheer amount of times I have asked the federal government, are you sure about that? All right, on the next piece. So who can claim it and why, at least according to the federal government? So the Clean Electricity ITC, from the federal government's perspective, was originally envisioned to help large crown corporations with their build out and to help finance inter-provincial transmission. So that's between provinces, purely federal jurisdiction, and it was a recognition that there's a lot. Now, CanREA came in and had to do a lot of reminders saying, hey, and with the support of both, again, Jeff and Etienne for a lot of those validation points, come in and say, there's a whole lot of other folks involved in the electricity space. And here we go. So we've had to do a lot of fighting to bring on. Now, a lot of where the government of Canada has really focused its piece on is in that major grid scale items and looking at who owns and buys. Now, that doesn't mean you can't have behind the meter applications to this, but it is limited to your municipally and indigenously owned corporations that are under a very specific. I know Chen is going to be getting to a lot of that soon, and that they are, and that's kind of it. We've hospitals, schools, charities, churches, etc., which we've seen. If you look at, remember in Ontario, the microfit program or any of those, you've seen some broader categories for those supports. The federal government has sort of limited it to that treasury and have come back to us and saying there's plenty of other grants and other things there, and look at our funding through X, Y, and Z. And so we're going to be continuing to push on this because we do, as Jeff and I were talking at the top just before everyone came on, there is Budget 2026 coming up, and we are pushing hard for some inclusions and things that we can try and move things forward for the behind the meter sector. Here, if we move to the next slide, please. So what we're doing in that budget submission and a lot of our advocacy in the sweltering heat of Ottawa right now is we're trying to really push for a better way for net metering to work through allowing two-way transmission. I mean, two-way. We all know here on this thing, there's a lot more of that enabling infrastructure. And one of the key things we're trying to do is make it administratively easier for folks like yourselves to help with installs. So that's creating some clear schedules on what's in, what's out, make it really easy. And I want to give big kudos to Chen, who has really helped me on a lot of that design process and how we're moving forward on that. I want to give a big shout out to Jeff again on helping us with the labor requirements and right-sizing things like apprenticeships, making sure that we're not losing out on all the intent of the law from the federal government, but we're making sure that folks like yourselves who are doing an install, and when you're trying to put forward things for a customer, you don't have to go through a heck of a lot more paperwork if it's below a Meg 1 threshold, and to really bring along a lot of those other administratively easier burdens, because we know it's been taking a heck of a time to get these things. So I'll pause there. As always, open to questions. Happy to talk about any of the stuff that CanREA is doing and what's going on at the federal level. But without further ado, I'm going to end it there and pass it on over to my friend Chen.
Amazing. Well, thank you so much, Fernando. It's always good to see things end up where you close to where you think they're going. Not exactly where we wanted, let's be honest, but I think the clear message, I think, for everybody is the ITCs work. They are there. They are a process, and we're refining stuff. I'm not expecting in the next budget to have major wholesale changes happen. Think about refinements, operationalization of it, not wholesale change. And what we hope also, and Fernando mentioned it, is that they're going to last beyond 2034 and beyond, right? So we're also hoping like a longer view that this is going to be the way renewables work in Canada. So Liam, if you want to get us started on this just says how awesome we are. So I'm going to skip this. But just bear in mind, so this is coming from like 3 years of being in the trenches of making things happen in the ITC world. So what I'm going to cover a lot of things today is try to frame it as what matters to you guys as installers, as EPCs on the smaller scale side of things, and not think about this is only matters to 300 megawatt wind farms. So I think there's really concrete things that matter to a 100 kilowatt rooftop system. So let's start with Bill C-15. If you want to go to the next page and next one after that. Just a recap, right? We now have 5 ITCs. We're at 4, now we're at 5. So the new one is the Clean Electricity ITC. And it's one of 2 that really matters to this market, right? So the Clean Tech ITC, we've talked about at length in different webinars with Jeff, Fernando, and otherwise. But the new one is really Clean Electricity ITC. Key thing there is one is 30% and one is 15%. Both have a 10% tied to the labor requirements. which means the clean electricity ITC without labor is only 5%, and the clean tech ITC without the labor component is only 20%. So that's really kind of, and that's part of our clean economy ITCs, I'm going to say, framework that we have in play here. I'm going to go to the next slide. So what did really change, right? So it's passed now. So we have a clean electricity ITC. So it is live and retroactive to April 16th, 2024. And I'll tell you why the retroactivity is so important in a few minutes. There's things that really don't matter much to us here today: hydro units, eligible jurisdictions, nuclear, things like that. But the key thing that is super important, and on both ITCs, is the last point in my slide, which the claim deadline is now the later of 18 months after year end, or December 31st, 2026. What does that really mean? So if you look at the life of a solar project, you're going to commission the system. It's going to be, from a tax perspective, it's going to be deemed available for use. That means it's earning revenue for you or your client, as an example. So the claim process, you have to wait after that for your client to hit their year end or you to hit your year end. Then you have 6 months to file your tax return to claim the ITC. Normally, you had 18 months from the end of your financial year to claim the ITC. 6 months usually in the regular process, or 12 other months after on an amended framework. What that means now, what I've just read before, is that for any project before then, so if you build something on March 29th, 2023, the day after the clean tech ITC is eligible, and you didn't claim it because things were too busy in 2024, it was unclear, whatever it is, you can now claim it all the way to December 31st, 2026 on either the clean electricity ITC or the clean tech ITC, depending on your projects. And we're going to go into that. So what are the new things also on the clean tech ITC is that same deadline is there. And now you also have the refurbishments. So for those of you operating in the Ontario market, we've seen a lot of, say, rip and replaces on Fit 3s or Fit 1s and Fit 2s happening. So it was kind of going around it, but now refurbishments are really an actual eligible aspect here. So that's super important. Transmission equipment and so on is clarified. Those are the two main things, right? So we have clean electricity ITC is live, so we have that. New filing deadlines, and then refurbs are actually active on both, which is a super important thing that we're going to get into in a second. If you want to go to the next page. So what is the clean electricity ITC? So it's a 15% that's claimable by taxable Canadian corps and so on. It's across all the same properties and so on, and it's active since April 16, 2024. I'm going to go into who's eligible on the next slide, but just as a stance here, it's really kind of a similar range than the clean tech ITC, and it can just extend the eligibility a little bit. And there's certain aspects in there that's new, kind of transmission, things like that. But for really the C&I market, it's really about who you're selling to at the end of the day, and that's what really matters. So if you want to go to the next slide. So one thing that we were all hoping for, and we did not get on our wish list with this budget, is the traditional nonprofits and charity. So if you're tax exempt with no tax liability, this is really a tax program. So you've been effectively excluded. So unless you're a municipality owned or indigenously First Nation owned. That's easier to say. Sorry, guys. So at least 90%. So this is really super important. I know the whole MUSH sector, municipalities, universities, schools, hospitals, charities, and so on, is kind of a tempting market segment. You can throw churches in there and so on, but they're really not eligible, unfortunately. Do I believe, a little bit like Fernando said earlier, if this is going to change on someone? I'm not really seeing that happening, unfortunately. All right. So I know we've gotten a lot of requests when this came out. I was like, oh, okay, well, I have this health center in Quebec. Does that qualify? No. And you really have to look at the structure or what manages it and so on. So this is kind of an unfortunate side effect of it, but it still opens up a lot of avenues for First Nation owned corporations, as an example, or usually municipally owned corporations. You usually have municipally owned energy corps that we've seen before, so different setups. So the municipal segment is still kind of a good place to dig into. And the change here is also that the CIB and the Canadian Growth Fund can now actually be claimants, so they can actually own assets, which is kind of a different twist than just providing financing for them as we think about. So maybe we go to the next slide. So this is kind of a little compare and contrast between the clean tech ITC, so the 30%, and then the CEIC and clean electricity ITC, which is the CEITC. So solar storage are on both sides of the equations. Refurbs are on both sides of the equation. Refurbs are super important for the audience on today, and we're going to talk about that. Like the really larger projects, large hydro, large nuclear, interprovincial transmission, so really big projects, that's only on the 15% side of the equation. And on the smaller side of things, like heat-only equipment, like heat pumps, geothermal, those type of things, that's really only still in the clean tech ITC. And that usually sometimes complements retrofit programs that you may be running in a specific building where they're going to put a heat pump and solar and things like that. So if you're not doing that install, it's something to flag to your client, say, hey, have you thought about this? Because it can save 30 cents on the dollar, and not everybody takes advantage of that. And for those of you who are installing chargers as well, those are eligible, but really for non-road EVs. So if you're plugging in a forklift, that's good. If you're plugging in a Tesla, no good. Long story short. So maybe we move on to the next slide. So I started chatting about this in kind of our slide about what happened in Bill C-15, but this is really, really important, right? So you now have more time to claim. This is something where you can look at all the projects you've delivered in 2023 and 2024. And I'm going to show you a little framework to think about in the next slide. But you have a second chance. You have a second kick at the can to really make sure that is. And this is something that I'd be happy to kind of look with participants and so on and help you out on determining this and so on. It's something that brings huge value to your clients right off the bat. Imagine you can pick up the phone and say, hey, I may have found 20 grand for you. What do I need to do? Not much. So we can go into that process a little bit on the next slide, if you don't mind. So you built projects in 2024 or earlier in 2023. Is it too late for that? Has that ship sailed? Not anymore. And that's a huge thing for Bill 15. So the first thing you need to check is, did your client claim ITC on their tax return? Yes or no? So that's sending them an email. It can be a mass campaign to all your clients that you've delivered since 23 to the end of 2025. I have a one-line questions like, did you file your ITC claim? Yes, no. That's the first thing you want to know. Then their fiscal year end is important on certain things, but really you have until December 31st, 2026. So that should be the key date you have in your mind. And then if you look at this, after those two steps, say, hey, they haven't filed an ITC, then you can say, hey, can we go get the 30%? But the first thing is you have to understand that, hey, can I go get the 20% or the 5% if it's a clean electricity ITC? And then you look at, did you have apprentices on site? Did you have 10% of the hours performed by apprentices? If you did, then you can get the 30% because you can't really invent apprentice hours after the fact, unfortunately, but you can pay people after the fact. So first check is really, do we have enough apprentices on site to make that 10% threshold? If you did, then you can check if your people have been paid what is determined prevailing wage, and we've touched on this on other conversations, but you can pay top-ups as long as they're paid before your client files. So there's an opportunity there where you say, hey, let's say it's a $400,000 site, and it's going to cost them $10,000 more in labor to go get 120 grand. It's nothing to sneeze at, right? So this is an important kind of math equation that you need to kind of frame for your clients, because I'm sure they're not following this up because they've built their solar site and they've moved on from there. Can I move to the next slide? Repowering and refurbishments. That's also a big change. So if you've gone in and this is an important definition here that we have on the top of the slide, significant alterations, renovations, improvements, or additions to a property to substantially, and this is a list of or, it doesn't have to be ands, either extend its useful life, increase its capacity, or improve its efficiency. That goes really from a capital asset basis. So it's something that would be capitalized by your clients. So if you're repowering a site, right, you're keeping the racking, you're just putting new panels on, you're changing out the inverters, you're oversizing a bit more, and so on. Before, this would not have been, I'm going to say, eligible expenses because it had to be a net new system. So this is a great opportunity. If you couple that plus the December 31st, 2026 deadline, you have an opportunity to look at those projects, which before March of this year wasn't really in the works. So that's a super opportunity as well to look at your business, look at what you've done in the past, say, hey, we could save money for our clients. And that's somewhere for you to make some margin as well, potentially, if you want to share on that and so on. There's different models that you guys can look at, say, hey, I found you $100,000. How do we split it, or how do we set up? So that could be an interesting conversation to have with your clients. We move on to the next big thing that's coming. That's a bit of a curveball. So on the last budget, they started consultations on domestic content. So for you, those of you who've operated in Ontario in the feed-in tariff days, you had domestic content requirements there. That's where we got our start over at LCAB. So really the position that's been driven by Fernando and us at CanREA and other places is really, we're not putting this, and it's what we've been hearing recently. Fernando, maybe you want to chime in. It's really not going to be a requirement. It may just be an adder. So if you are using locally sourced products, your clients may have may be eligible to an adder on top. So an additional ITC on that component. We're expecting to see more in the fall budget. But that's really what we're going to see here.
Absolutely, Etienne. Thanks for that. So on the domestic content, as Etienne pointed out, there's been quite a few areas of consultation and engagement. Initially, there has been a lot of discussion around a requirement if you're going to claim the ITC. Now, CanREA and our partners at various other industry associations, and with the support of, again, Jeff, Etienne, and the rest of the CanREA membership, have engaged really heavily to the point now they are now kind of figuring out how to blunt it. The federal government is very clear. They want to make sure that Canada's got a manufacturing sector, but we're trying to remind them of what happened during the FIT days at the end. And how do we do this in a sustainable and smart way that doesn't penalize folks? So there is appetite on an adder. We're just trying to figure out how that adder works out.
Well said.
Yeah,
Etienne, go ahead. If you have another point on domestic content, Etienne.
No, go for it.
Okay.
Go for it, Jeff.
I was just going to actually go back a slide and just clarify. We've got a couple of questions, and I know you wanted them throughout. So the first was just if you can clarify, is it possible to claim both the Clean Electricity ITC and the Clean Technology ITC on the same project or different aspects of that project?
Good question. So if you have a partnership, if you have two parties who are co-owning the site, each party can claim their own ITC on it. But on one property, you can only claim one ITC.
Great. Okay. And we'll have open Q&A at the end. So if people want to clarify further, they can. The other is a question about eligible entities. And so specifically, what about strata corporations and housing co-ops? They are incorporated Canadian corporations and can or should at least file taxes, but usually don't have a tax liability. So are those eligible entities? Again, strata corps and housing co-ops.
It depends who owns them. If they're owned by a municipality or a First Nation, then yes. If not, no, unfortunately. But something, Jeff, maybe I take this offline and dig into that question just to be 100% sure, and we can revert back. But from the looks, it's really kind of the ownership behind the non-taxable entity that's important, and that's framed to the municipalities and First Nation ownership at least 90% on top of things.
Yeah.
And
again, I know.
Thing I'll add on that is we do see CanREA, again, with the support of with the team here, managed to ensure that REITs, so real estate trust. So that I will leave it to Etienne there, but that is an avenue where some folks have had that in there, but that is clean technology, I believe.
Right. Yep. Yeah, and I just again want to reiterate because both Fernando and Etienne have already covered it, but this inclusion or exclusion of these various entities has changed in our understanding along the way. We had always pictured that the mush sector and including some of these housing co-ops and strata corps, regardless of ownership, would be included in the Clean Electricity ITC, and that is no longer the case as approved. So unfortunate, but just wanted to again recognize that it changed since our original understanding. So Etienne, I'll get you back on track here. And again, I'll interrupt if there's further questions.
All right. We're going to go into one of my favorite topics and one that keeps people up at night. It's kind of funny to frame it that way, but it's labor requirements. They're still super important because they help you get to that, what they refer to as the regular tax rate. It was the full tax rate, either the 15% or the 30%. So maybe we just jump in on the next slide. So it's 20 or 30 or 5 or 15, right? Depending on it. There's really two things to manage to get the 10% is prevailing wage. So you need to pay people who are installing your system or preparing or installing property on your site along benchmark wages, which are effectively union wages. Let's be transparent here. And the second is really apprenticeship. You have to have at least 10% Red Seal hours for registered apprentices. And there's a lot of back and forth that happens. We work with a lot of smaller installers across the country, and they're like, okay, well, what activities are really in or out? So I think a best practice that we've seen, if you really kind of break down your scope very precisely, there's things that can be really the transport of materials. Like when you're bringing materials to the roof, it's not really preparation installation, you're transporting things. So you can exclude certain hours in your calculations, which can help on your apprentice ratio. I'd be happy to look at that on a case-by-case basis with some of you here, but that's really kind of looking minutely in how you run your operations can really help you get that apprentice ratio. Because the general laborers, as people call them, are really, unfortunately, a red seal trade, which is construction and craft work. People sometimes put them in kind of electrical or in roofing and things like that in different trades. But they can be included. They're really not excluded at this stage. So that's something important for everybody to understand today. Moving on to the next slide is really who this applies to, right? So the key thing is like this doesn't only apply to you. It applies to you, your sub of subs, and your sub of sub of sub. I can't stress this enough. It's really the project that must comply, not any given subcontractor. That's really on the project basis. And covered workers, that's who it applies to. Like if I go on site for an audit, I'm not installing anything. I don't count. But if you have a tool belt on and you're installing racking, you count. Same for panels, AC, DC, and so on. So think about it. And so it's really the individuals. If you have people with tool belts on, they usually count. Long story short. And really, you need to track that. You need to be able to document and to your client. Ultimately, every single project right now, and that's one of the things that we're trying to help on the administrative side of things, gets audited. So like we have a client who's gone through 21 audits already, which is kind of a massive undertaking. But really kind of how you prove that you've met those requirements and the cost side as well, it really helps your clients kind of get their money faster at the end of the day. So move on to the next one. And this is an additional curveball. I know Jeff, you said in BC, so as of April 30th, all collective bargaining agreements in BC expired, right? So what do you do now? So if you're building this season before December 31st, it doesn't change anything. You can use the same eligible collective bargaining agreements. However, as of January 1st of next year, so 2027, you have to add inflation on top of the prevailing wage that you had previously benchmarked in BC as an example. And we've had this dynamic all across the country. There's some that are expiring in Nova Scotia. There's a bunch that expired last year in Alberta and in Ontario and in Quebec. So really being practical about it. So as funny as it sounds, to monitor collective bargaining agreement renewal timelines for your trades is something that should be in your calendar. Or you can just work with us and we'll make sure to keep on top of that for these things. So this is super, super important as you file things. And for longer projects, you may have multiple wage rates to pay, which is a nuisance, I know. That's what we're trying to help out as well on the kind of administrative burden with CRA and finance this year. Moving on. Maybe I think I'll go into incentive stacking. Maybe Jeff, usually on labor requirements and incentives, there's more questions that pop up usually, so we can make a stop there. So incentive stacking, you can't double dip. It's probably the long and the short of it. So if you have, like that question was just asked, so it's only one ITC per property. And if partners, you can elect which ITC you pick per partner. If you have a $100,000 project, you're getting $10,000 for the city to encourage solar, as an example. Your cost base now, from an ITC perspective, assuming all expenses are eligible, is really $90,000. You cannot claim on the 100. And they ask you in the forms what incentives you are receiving or are expected to receive. So careful on the expected to receive part sometimes. If you don't get it, you can always ask for it later. So it's not the end of the world. There's only one other ITC that stacks. That's the Atlantic ITC for projects in the out east. But you have to be careful there. Not everybody can claim it. I was talking to a client just yesterday. They're putting solar in a car dealership. Car dealerships don't fit the AITC manufacturing view of the world, right? So they cannot claim the Atlantic ITC. So there's little nuances there. We've launched on our website a list of incentives that are available across all the country. So if you're curious, if you have different incentive programs, feel free to look at our website, LCAB.com. We've put a list there just to help out people more than anything in that type of framework. It's not by any means complete. We try to keep it up to date. So if you know other programs, let us know. We'll gladly add them. So maybe with that in mind, Jeff, we can open it up if there's people who on the labor side or the incentive side, they have questions.
Great. And as a reminder, we have everyone muted just for audio quality. So just if you can find the Q&A tab on your Zoom bar, sometimes it's under a more option if it's not showing obviously on your Zoom screen, and then just type in your questions there now or through the rest of the presentation. Okay, Etienne, there's none yet. I'm happy to come back as people enter them,
for sure.
So we'll keep moving.
Yeah, and this is super important. This is kind of building a strong claim. In this case, you're presumed guilty until proven innocent. So you have to prove that what you're claiming is factual. And that's the key important part here. So if you go to the next slide, there's a few things you should just keep in mind always. And that's really at the top of your funnel when you're qualifying leads, who can claim. Like we just talked about today, we thought that not-for-profits would be eligible for the Clean Electricity ITC. That is not the case. So if you have to prioritize two leads, unit economics are going to work better under a clean tech ITC, right? So who can claim the eligible entity is super important. The third aspect here that you should really think about is that filing deadline for 2023, 2024, or even 2025 projects. You have time ahead of you to claim, but time flies. We're already at June, so you effectively have 6 months ahead of you to get your things in place, and that's super important, especially looking back. Limited partners and so on, it adds a level of complexity. So try to sell to corporations. It's just a bit easier. Think of what's eligible, what's not. Think of your rates and really try to prove all that. You can never over document, but you can always under document. Err on the side of saving more documents in a clear aspect in all your client folders and so on, because the projects will be reviewed. That's the name of the game right now. There's not much questions there. So you really want the buck to be always in the CRA side, not on yours or your clients. So if questions come, the rule of thumb we try to say is like, you should be audit ready by the time you file your taxes. So then you can kind of forget about it until they come back. I'll go to the next slide. It really talks about the eligibility of the expenses. And I think that's something that we often encounter where there's confusion. So what's eligible for the ITC is really the equipment and all the affiliated costs to get it there. So if there's tariffs on top, delivery, installation, commissioning costs, and so on. These are all things, labor and all of that. And where it becomes tricky sometimes, it's interconnection fees, labor fees, things like that. So for my design and engineering, put final in front of everything to make sure it really kind of covers that. Everything that's preliminary in nature is usually excluded, and Bill C-15 actually went out and clarified that even more. So they're going to be quite strict on preliminary activities. And if you're doing any type of work on the building in which you're installing, so structural upgrades or re-roofs and things like that are usually excluded. And if you look at a gray area, sometimes it was transmission. So if you're connected either on distribution or transmission, does that count? That's clearly now included. But if you're just being charged utility fees or things like that, that's less so. And really think about what reduces the ITC base, which are if you're getting other incentives, government grants and rebates and things like that. And one thing I'm just going to use an example because I was working through one this week in Saskatchewan. The sales tax is not refundable, so it actually becomes an eligible expense because it parts of the cost of acquiring the system. So in most other jurisdictions, you get the provincial sales tax or GST reimbursed in some way, shape, or form. That's not the case in Saskatchewan, as an example. So make sure to include that because it does make the claimable amount bigger, and your client is in the end of the day is actually paying it. So it's important thing to consider sometimes. There's little details like that in most jurisdictions just to think through. So I think for me, that's always a nice framework to look so you guys can keep this slide just thinking through that is often important. If you want to move the next slide, go ahead, Jeff.
Just before we do, two relevant questions that I want to interrupt for. So one is we use the term property at times to reference the actual equipment, right? Because that's kind of the definition, but it gets confused with the concept of a real estate property, right? And so the question is, it says one ITC per property. Is that per project? For example, if a corporation has one project claim and then does another expansion later on in the same physical property, can they claim another ITC?
Very good question, Jeff. And ultimately, you're right. An eligible property is really, they're thinking about the system, right? So you can claim one ITC on let's say a solar system. So if you put one system in place on a building instead of using property, so you're going to put eligible property, aka the solar system, on a building. So you can claim the solar system, and there's one claim for that solar system. If you expand that system, afterwards you can do a second claim because you're effectively putting a second system in point. And in this case, you would fit under the refurb aspect and so on. So you could connect to the same. Before, you couldn't reuse used equipment in your system. It all had to be net new. With the refurb, repower kind of view of the world, you can expand your system and claim that full expense very easily.
Yep, makes sense. Okay, the second question before we move is, I'll just read it verbatim here. I've heard that many installers who are non-union are able to claim. I've heard various strategies. Some seem like they do not meet the intention of the program. Can you outline how this might work per the intention of the ITC if using non-union labor?
Yeah, great question. So the fundamental is your non-union labor would end up being paid actually just slightly less than union labor, because the way the prevailing wage is determined for a site is you're going to match your level of experience, your location, the actual duties a worker does against a trade. So if you're an electrician, I'm going to use that. That's kind of an easy comparison. So you're a journeyman electrician, on the collective bargaining agreement. So you take effectively the journeyman base rate plus health and wellness, plus pension, plus vacation and stat holidays, like holiday and vacation. Those are the four components that constitute prevailing wage. The union dues are not in there, the training funds, all of that, that's outside. So you take those four components from the collective bargaining agreement, that becomes your prevailing wage. So even if your guy in your shop is non-union, you still need to pay that person that wage on an hourly basis, right? And that wage actually can be built out in the same four components, right? So it can be base wage, vacation, bonuses and pension, not necessarily bonuses and pensions, but pensions, health and wellness. So we see people paying bonuses at the end of the project. That works to kind of make your total paid amount divided by the number of hours equal or higher than the prevailing wage. We've seen people change benefits into taxable benefits to include them. We've seen a number of strategies that exist, but at the end of the day, the worker compensation with those 4 buckets, base rate, plus, as I say, cash compensation, let's call it that. It's probably a fair way of looking at it. Health and wellness benefits, pension benefits, and vacation and holidays, that has to match the prevailing wage. So you can split it in different ways. You have 4 buckets to play with, but the total value to your employee needs to meet those thresholds at the very least. And I've heard of stories where things are not met and people are claiming and so on. And from the level of scrutiny that I've seen people go through, I'd be worried for those projects.
Yeah, and I'll just augment that a bit with a more political answer, Etienne. I mean, because there's some of this embedded, I think, in the question. There remains debate on whether this came from the NDP at the time to support the original Cleantech ITC and or a Me Too of the US program that it, inferred prevailing wages were required. And you can debate it, and Fernando can help keep us honest on that. But the reality is it came in and said, effectively, we're going to give federal dollars. We want it to be supporting good jobs in the country. Good jobs was sort of tied to decent wages. Decent wages were tied to prevailing wages, and that was baselined on union wages. This is not to infer that you should only be using union labor. It's to say we're going to level set it so that if you use non-union labor, they're going to get paid at least the same. And it kind of level sets your choices, and it ensures that federal dollars are going towards good jobs. So I just wanted to be clear that people not using unions are not violating the program's intent, in my view.
I 100% agree with that, and that was always the intention early on. The minute they announced that, I remember walking in to sit down with some folks from the Minister of Finance's office and saying, we don't have a prevailing wage system like they do in the US, where they've had that since the 1930s. They said, you're right. And the intention is to make sure that if Canada is helping to bring along a lot of projects and companies will benefit, we expect Canadians to benefit. That's where their mind has always been when they try and bring in anything for a domestic content adder or this element. And it's our job as CanREA and those in charge and LCAB to really work with them to make sure that when they're bringing these in, and yes, they have every right as an elected government to choose to add things, take them away, but to remind them of the need to ensure simplicity, to ensure that folks can keep their employees and moving forward. So, as Jeff said, it is not necessarily about you need to hire local X, Y, or Z. It is about you need to ensure that the folks on that job site are being paid in line with the federal government and your the local union agreements say.
Great. Etienne, that clears the questions for now, so I'll let you keep moving.
Well, I think that this is kind of on some of our last slides here. So CRA audits are going to be there. Just build it as you go. There's lists of documents here. It has to make sense. It has to be evidence. So think about how you invoice your client. That's what they're going to submit. So you don't need to show your clients how much you've paid your solar panels when you buy them from Jeff. You really have to kind of focus on the total value of your costs. Your profit margin can go on top of it. It's all claimable. So what we see the best way to do that is really breaking down. Let's say you have a $100,000 invoice. You say, well, $92,000 of this were for kind of solar panel installation and commissioning. $8,000 of that were from municipal fees and so on. And you just split it down. It's clean, it's defensible, and so on. And that's the only piece of paper really that at the end of the day, your client will have to show that they've paid, and they'll capitalize that amount and work through it. Some people do we see clients having the full value of their invoices out as well. we're obviously on the safer side of the equation, the more defensible side of the equation there. So really, that's a good aspect to kind of always say document, document, and document. I can't stress this enough. Moving on. So really, the business case is important, right? So understanding what's part of your scope is in or out is important. And really starting early, thinking about ITCs, got to make sure that your claim is a success. And really documenting, once again, I can't stress this enough, and really planning on the labor side for the right rates and so on is going to be super important. What you want is when your project is audited, you want to be able to move fast or respond quickly so that you get money or your client gets money much faster. So all that I've said can look a little bit complicated. Tina, if you want to move to the next slide. It doesn't have to be. Like, we've built a framework that's my shameless plug, really, to help installers and EPCs manage these things on a systematic basis. So we're happy to kind of help set that up and so on. For every business a bit different, but really our view is that you should operationalize this, ingrain this into your operations. And that's going to make this rinse and repeat. This is not going away anytime soon. And Fernando, Jeff, and I are pushing hard to make this the norm for as long as possible. So it really get it into your operations and so on. We're happy to help. We have a program that runs, which is our SOP program. We have installers across the country who've joined already. And that's just, we keep updating things as we go along, as we just did now for the Clean Electricity ITC. You can push the next slide that shows kind of the unit economics of that program. We have nothing to hide here. So it's a $5,000 fee and it's a 500 month subscriptions to keep everything updated, and also for Q&A, additional project audits and so on. That's all optional. Thank you so much for having me, Jeff. It's always a pleasure to talk about these things, and please reach out. My contact information is on the next slide. So if people do have questions and so on, a lot of my role ends up being doing a lot of education work, and that's why I'm happy that Charge is running these webinars. It's super important that everybody is on the even keel on what really they understand and how this works. So thanks so much, everybody, for attending today.
Yeah, well, thanks for doing that, Etienne. And we'll, again, please enter your questions in the Q&A tab while I wrap up here. But yeah, I just wanted to reiterate the reason we engage Etienne for these sessions is LCAB is contributing actively to the legislation as it's being developed. We can only affect so much, but we're always trying to get in there and shape the rules in a way that's going to be beneficial for you as EPCs. As well, I think he understands the BTM sector, whereas a lot of ITC advisors are going to be focusing on front of meter large individual projects. He understands that actually at the BTM level, you need a framework. And this is really how he's shaped this program. And it's working for a variety of EPCs. And we just wanted to make sure that everyone was aware of it. So that's that. Thanks again, Etienne. And yeah, your contact info is here. And I'll move to just a single wrap-up slide to remind everyone that Charge has commercial solar equipment across Canada. I'll just add a few contextual comments. So for modules on the commercial side, our primary partners on modules in general for commercial and resi are Longi and JA Solar. Coming this fall, we're going to have some commercial mods from Jinko. And I just wanted to remind everyone, these brands are not random in any way. If you look at a bankability matrix, this is the last pyramid I could get, which was from Q2 of 25. But it shows all of the various module manufacturers. Apologies for the small font, but these brands are not an accident. We focus on the most bankable companies, and I think it's relevant for commercial projects in particular. So not all modules, the modules are not all alike. I think you need something that is going to last, and you need to be backed by a warranty from a company that's going to last at least as long as the warranty duration. So just wanted to highlight that. On the inverters, of course, the Solis 600 volt inverters remain popular in the country as the only certified 600 volt three-phase option that we're aware of. So we see a lot of Solis equipment. but there's 125 kilowatt and 185 kilowatt options available. And so below that, we see a lot of 480 volt solutions going out from Solus as well. They don't just have the 600 volt options, but 480 volt options from Solus, SolarEdge, SMA, and Fronius. Fronius also has 208 volt options, as does SolarEdge. And then we see still some microinverter solutions at a commercial scale that are 208 volt as well from AP and Phase. On the racking front for commercial projects, of course, we have racking solutions from Fast Rack of all types. So again, not only sloped roof and ground mount, but also ballasted flat roof solutions, which we're really seeing through the Cleantech ITC, a lot of growth on Fast Rack Avenue for commercial flat roof solutions. Battery systems, of course, are becoming more popular. So even, the inverters I mentioned, most of them are grid-tied string inverters or micros, whether they're at 480 volts or 600, but we're seeing increasingly batteries being included. They are eligible under both the Clean Technology and Clean Electricity ITC. And so they will require often a hybrid inverter from one of the manufacturers listed above. And some we're seeing are putting in hybrids now so they can add a battery later. And that's an interesting concept. So there's hybrid options from a lot of those same vendors above. And really what we're offering, if you get we have a range of solutions that are sort of in the smaller end, 30 kilowatt hour kind of range. Quite a few of those are 208 volt interconnection, which is great for sort of small or medium commercial. And then we're really seeing this standardized block around 125 to 150 kilowatts power, and then maybe around 200 to 250 kilowatt hours for storage capacity. And there's a variety of them. Most of them come in an outdoor cabinet, so they can be scaled in either the DC side of things for battery storage capacity, or on the inverter side if you need more or less power or a different interconnection voltage. So please reach out to us. We have a variety of commercial storage options available. We really like a Solus Pites combo, but there's a variety of other choices on the table as well. And finally, last but not least, we provide a substantial quantity of electrical and mechanical engineering services across Canada. That can be as simple as a feasibility study or assistance in choosing which battery system makes sense, all the way up to a fully sealed design package, including commissioning services if required. Okay, that's it. And I wanted to just leave you with there is a Clean Electricity ITC landing page now, like the Clean Technology ITC page that also exists. We expect this to continue to evolve and be fleshed out with further details. So if you want to grab this QR code or just search for Clean Electricity ITC on the CRA page, I just wanted to make sure everyone was aware it is there. It gives more detailed rules, and it will continue to evolve over time, I'm sure. Okay, so we don't have any additional typed questions. I'll just give a last call for those before we wrap up.
While we wait for those, Fernando, Etienne, and Jeff, thank you for your time today and for your detailed presentation breaking down the Clean Electricity ITC. Thank you to everyone who joined us today. This webinar recording will be emailed to all of you by the end of the day today, and it will also be added to our YouTube channel, which I'll just pop into the chat there. It is youtube.com/@ChargeSolar. So it'll be live there as well by the end of the day today. And thanks again, everyone. Any questions? None. None. We answered them all.
You answered
Great
them all,
job.
We're so clear. We're so
clear.
Cool.
Wonderful.
Thanks again, everybody. Have a great
Thank
afternoon.
you.
Thanks all.